Hi. A lot of people are talking about home prices in the area, across the DMV, particularly in Montgomery County. And the question is, are prices about to fall dramatically, or is this a new normal? So we're going to talk about that here a little bit, give you some insights into the market, into the area, what's going on, what maybe you can expect. I don't have all the answers, but I've been doing this about 20 years, so I have a little bit of an insight as an on-the-ground person as to what's happening with the housing market and what you can expect going forward. You've probably noticed, if you've been watching the market, that prices haven't dropped dramatically. They aren't escalating like they were, and there isn't the frenzy that had been going on during COVID, but they are holding fairly firm in a similar range. And if a house is priced well and it shows well, it's liable to get competition, multiple bids, and could raise the list price of that, or could raise the contract price of that property up from its list price. It has happened and is continuing to happen in some areas. With all of this going on, you may be wondering what's going on behind the scenes. So that's what we're going to talk about today. First thing you need to realize is that the DMV, and particularly Montgomery County here, is different in many respects the housing markets across the country. In our area, as well as lots of areas across the country, inventory is still tight, and that's really one of the main aspects that are keeping prices up in the range that they have been for quite some time. So while you'll hear the news reports across the country of a housing slowdown, realize that what we have here in the DMV is lower inventory meeting pretty steady demand in general. And inventory is still pretty tight. We already had a lower inventory prior to COVID, but it was starting to build again. And you can see that what was happening was slow building over the course of a couple of years. And then with the advent of the surge through COVID, we saw many, many sales happening very, very quickly, and the inventory, which was already at a low ebb, get pushed down even further. So supply went really, really low while demand was really, really high. And since that surge has ended, we've started to recover a bit, but not anywhere near the levels that were pre-pandemic. So while you're watching all of this, you may start to wonder, is now a good time to buy? Is now a good time to sell? Which option is best for me right now? There are lots of different things that have factored into one's decision, and ultimately it's a personal thing, but there are environmental factors to look at when you're making that decision. And when you see record high prices, then you wonder if it's sustainable. If I try to put it on the market right now and sell, is it going to sit too long and then I won't be able to get the price that it's actually worth? If you're buying, you wonder if should I wait because maybe prices will go down. These are all valid questions and things you need to really take a look at. And there are aspects of this market and ours particularly that will help shed some light and help you make better decisions as you do decide what you're going to do. As I said, the biggest factor right now in the market is scarcity of inventory, just not enough houses to go around. Generally speaking, it's just low inventory. There's a scarcity of housing, not enough houses to go around, and so that has helped keep prices at a higher rate than otherwise. We've already talked about that, and that is one of the bigger considerations of our area. Secondly, and this is aside from government shutdowns and things of that nature, job security around here is pretty stable. People tend to not move in and out of the area. It's always curious when people move into the area, they wonder about, because it's a political arena, that people move in and out very frequently. That's not really the case. People that once they move here tend to stay here. And so there's not a lot of moving going on out of the area, resulting in newer inventory of homes for sale. And we have a lot of stable industries that many people around here are employed by: education, government, healthcare, those sorts of things. And so they don't tend to have the ebbs and flows of some industries. So once you start working somewhere or in some particular industry, people tend to stay there. So again, not seeing a whole rapid increase in inventory with people moving on from this area. Then add to that the lack of new construction in the area, and then factor in the lack of new construction generally. It's not meeting the demand, which is why people will pay a premium for new construction. And you'll see that as evidenced by someone does need to sell early on after having purchased a property. They often find that they have to sell at quite a bit lower price range than they bought it at. In many areas, land is scarce and regulations are tight. So building a new inventory of homes does not happen quickly or easily. So that's another factor in the inventory issue. Another thing that has helped sustain higher prices is a shift in wealth. There are many people around here who, either due to family wealth or equity gains or a combination thereof, that actually have the money to put down sizable down payments or even purchase with cash, which has made it easier for them to make the purchase, and that has helped drive prices up as well. Couple all of this with inflation and the rising replacement costs, many homes keep their value better, and it is often less economical to build a new house or to dramatically remodel one or add on to it. So it's often better to stay in the house you've got and sell it and recover the equity that you've got over the period of time rather than invest in new construction or a major remodel. Put these aspects all together, and they result in a bit of a sticky pricing environment. Prices don't go up so fast, but they also don't fall very dramatically or very quickly either. Now, it used to be that when you bought a home, your primary purpose for that was to find a place to live. And while, of course, you live in the place, many people and many buyers have shifted their viewpoint into making the purchase more of an investment, or as much of an investment as it is an actual place to live. So that has an effect on when we sell, why we sell, and how much we sell for. People more often now view homes as hedges against inflation and a means of investment. And when you couple this with the increases in value that occurred during COVID and even earlier in the 2000s, people actually saw, in many cases, properties go up well above the typical appreciation rates of the area. So now we have this added factor of people expecting an investment return on a house rather than buying a house, holding it for a while, and selling it and recovering any sort of equity that one could. Now there is an actual expectation for a return on this investment. And I'm not totally sure that that's an accurate viewpoint or even a wise one. Instead of people looking at a house and saying, well, can I live in this house for 20 years? Now, one of the first questions is, what's my expected return? I don't want to buy a house where I'm going to lose money. And while that's valid, I'm not sure it's totally fitting the purchase of a house as much as it might be a stock market investment or purchase. So what's next for the area? A lot of the forecasts I've been reading suggest somewhere 2 to 4% appreciation rise over the next year or two, which is not atypical for the area. It's not the double digits that we saw from 2000 to 2023, but it's certainly an appreciable range or a acceptable range for the area when it comes to real estate appreciation. I don't think we're going to see an expectation for a crash in pricing overall, but we are starting to see more ability of buyers to be able to negotiate and have room to negotiate, be able to buy with contingencies in place and keep the protections in place when making that purchase. None of the forecasts I'm seeing are calling for any sort of crash, even though the media might be suggesting that. But we are seeing a more return to a more quote unquote normal buying and selling scenario. So the new normal may be really more an aspect or maybe really more of a balanced market rather than leaning one side or the other, which has happened more recently. Now, I'm saying all of this during a time when right now we're experiencing things like government shutdowns, uncertain economic practices coming out of DC. So hopefully what I'm telling you here is going to hold true long term, and I really do believe it will. But there are a few variables going on, and we're all feeling a little bit of tension as to consumer confidence and what's going to happen next. I've been through this long enough that anytime there has been a major shift or a major change in the market and buying and selling houses, we're rather resilient and we do bounce back. Sometimes the question is how long, but it's never been a question of getting back to a quote unquote more normal scenario. And I do believe that that's where we're headed. There's a lot of potential pent up demand in the market. So a lot of people are sitting on the sidelines right now that could in fact purchase, and the uncertainties in the job market, the uncertainties in the economic climate are causing them to sit tight for a little bit. And I believe once we get past that over the next couple of months or so, you're going to start seeing people coming out. I don't know that we're going to see the heavy duty appreciation and the heavy duty competition that was happening a few years ago. And certainly rates are not expected to go down into those ranges again. But I do think we're going to see a return return of buyers to the market. We're going to see some more sanity coming back into the buying and selling process. And I think overall, we're poised for some stability again in the not too distant future. And it's interesting to note that many of the things that are happening in Washington right now are managing to keep the inventory tight, which again is going to lend itself to prices tending to maintain and sustain rather than significantly drop. Buyers are being understandably cautious, and I don't think that's even a bad idea. However, it's important that we don't take this caution to too much of an extreme because that by itself could cause panic and widespread upset, and it could cause changes in how we do business. And as I said, our markets tend to be more resilient than some parts of the country. So despite the headwinds, we still should end up at a more sustainable and less chaotic market in the not too distant future. So, in summary, what I've seen suggests that there is a temporary hesitation, not a collapse. Prices are going to stay relatively in the range that they are, dropping slightly. Rates are going to stay also in the same range that they are, also dropping slightly. Inventory should start to improve again over time as things stabilize and as the economy gets acclimated to potentially and hopefully more normal policies, we'll start to see a return of normal activity in the market. I believe there is pent up demand. So if you're a seller, I think you're going to see more activity from buyers coming soon. And if you're a buyer, I think you're going to continue to see more options available for you, both in terms of inventory and mortgage interest programs. So I look forward to seeing you along the way. If you have any questions, please get in touch. I look forward to talking to you.